Jumbo loans explained. If you're shopping for a particularly pricey home or you live in one of the country's more expensive communities, you may need to obtain a non-conforming mortgage, otherwise known as a jumbo loan. These loans can be useful because they allow you to borrow far more money for a home purchase than traditional mortgages do. Obtaining a jumbo loan, however, can be challenging because there are stricter underwriting requirements and qualification guidelines than conforming mortgages. Applicants are typically required to have higher credit scores, savings account reserves, and a more substantial down payment. You may also pay a higher interest rate on a jumbo loan than a traditional mortgage. But for those purchasing a high-end luxury property or who are home shopping in a region where home prices are especially steep, jumbo loans are an important option. Jumbo loans are mortgages that exceed the standard or conforming loan limits for the area where you're purchasing a home. Conforming loan limits are established annually by the Federal Housing Finance Agency, FHFA, and for 2023 the limit in most places is $726,200, but in more expensive regions of the country, it is $1,089,300. Conventional loan limits vary from one county to the next, meaning the limit in one county might be significantly higher or lower than another depending on the overall cost of housing in the county. Prospective home buyers can research conforming loan limits in their county by visiting the Federal Housing Finance Agency, FHA, website. Because they exceed conventional loan limits, jumbo loans are not purchased or guaranteed by Fannie Mae or Freddie Mac, the two government-sponsored mortgage enterprises. For that reason, jumbo loans are often considered riskier than traditional mortgages. Jumbo loans are offered by nearly all mortgage lenders. Some of the well-known jumbo loan lenders include Wells Fargo, Rocket Mortgage, Ally Home, Chase, Guaranteed Rate, and Veterans United. Jumbo loan qualifications. While the approval guidelines vary, it's generally more difficult to qualify for a jumbo loan. You'll need an excellent credit score, substantial cash savings or reserves, and minimal debt relative to your monthly income. As with any loan application, the higher your credit score, the more likely you are to be approved and to obtain the most favorable interest rates. In the case of jumbo loans, however, the minimum acceptable credit score is generally around 700. Taking steps to pay bills on time and maintaining low credit balances can help boost your score. And as you pay off new loans over time, your credit score will also improve as a result of a consistent payment history. Having ample cash reserves to cover mortgage payments in the event of a change in your financial circumstances is often another important factor in jumbo loan approval. However, the exact amount of reserves needed is another area that varies from one lender to the next. Debt-to-income ratio requirements, which is the amount of your monthly income that must be used for making debt payments, for jumbo loan applicants varies from one lender to the next. Some lenders may allow a slightly higher debt level than others. In the case of Wells Fargo, for instance, the total debt-to-income ratio allowed for jumbo loans is lower than the maximum allowed for the lender's conventional conforming mortgages. For non-conforming jumbo loans, borrowers must have a debt-to-income of 43% or less. But for other lenders, the debt-to-income threshold may be higher. Pros and cons of using a jumbo loan. Pros: allow you to borrow more money. The most notable benefit of a jumbo mortgage is that it provides buyers with access to more money for a home purchase. You can purchase a larger home. With more money at your disposal, you're able to buy the home you truly want or even have more home options to choose from. Cons: higher minimum credit score. The minimum credit score requirement for a jumbo loan is often about 700, whereas, for conventional loans, it is slightly lower, at 620. Substantial cash reserves required. Jumbo loan borrowers are often required to have from 6 to 12 months' income available cash reserves. Steeper down payment. Jumbo loans have tighter approval requirements and may even require that applicants have a down payment as high as 30%. The bottom line. Jumbo loans provide borrowers with access to far larger loan amounts, and in parts of the country where housing is especially expensive, these loans are critical. However, in order to qualify for a jumbo loan, you'll need to meet stricter lending requirements that often includes a significant down payment, ample cash reserves, an excellent credit score, and a low debt-to-income ratio. As with any type of mortgage, when considering a jumbo loan, it's important to shop around with multiple lenders to get the best deal possible. Be sure to like and subscribe to catch the next video from New Day Property Redevelopers.